Welcome back to the show, everybody. We got a great one for you today. Listen to some of these headlines here. Hong Kong Central Bank, Bank of England, BIS, and G7. And what about a settlement? And what about a price set or price adjustment due to a settlement in the SEC Ripple case? We're going to get into that and so much more today. I want you to stay with me. We're going to do a throwback episode about a price set, and I think it's actually becoming more and more relevant as we move through this Ripple SEC case. Let's go ahead and roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show. You can follow me on Twitter at BackupBradleyAbove and everything that we're talking about here today. Let's go ahead and talk about this real quick. This is my brother and sister-in-law down in Richmond, Virginia, killing it with some healthy natural treats for your best friend. That's right. If you're a pet lover, if you're a dog lover, I encourage you to check out these treats. There's a link in the description box. It is DP2021. There's a link in the description box for Jones and for a treat. Dogs love these healthy treats, so make sure you get one for your best friend today. Here's the numbers right now. It's 1.4 trillion. The market is still bleeding off collectively. We are down again another probably $50 billion plus here now just since this morning. So we're off by more than $1 trillion from the peak of the crypto market just a few weeks ago. So Bitcoin right now coming in at 31,000 plus, Ethereum looking at 2,400 plus, and we're looking at Cardano at $1.47. XRP is at 83 cents. Wow, 12% of the 19% loss over the 7-day has come from the last 24 hours. Let's go ahead and take a look at this right now. You can see, that's usually either really good or really bad. And when we hear the cannons and the gunfire from fiat links there, I think we know that the prices are currently falling like a manhole cover from the sky. That's what we're talking about. Now off by 12.6% just in the last 24 hours here. Let's go ahead and get moving into this news because we have a lot to do and a lot that I want to show you and go through. So let's get right to it here. Let's start with this, and I encourage you to stay with me through this. I want to hear your comments and your thoughts when we get to the end of this thing. BondCrypt says Hong Kong includes central bank digital currency and fintech strategy. Hong Kong Monetary Authority has published its Fintech 2025 strategy with CBDC, both retail and wholesale, included in the Digital Finance Innovation Package. Remember that, retail and wholesale. That's going to be relevant here again in just a moment. This is from Michael Val 5 Links. In April, the bank said it would launch a task force in collaboration with the Treasury exploring the viability of a digital pound dubbed Bitcoin by the press. Well, when I looked at this, I just wanted to bring you down through this. The article was a good read, but I just want to highlight this part down here. Retail CBDC can be directly held by citizens and businesses. This is a step change from the current system where money is held at a bank instead of going to a cash machine to withdraw money from, say, Barclays. Your money would instead be held directly on your mobile phone. Inter or wholesale CBDC is restricted to use by financial institutions like banks. It is used for big ticket bank-to-bank transfers and financial settlement processes. Again, pointing to the wholesale side of this conversation again, the interbank system, right? And talking about bank-to-bank transfers for settlement processes. Back end. Stay with me here. This is Benoit Coyer from the BIS and BIS Innovation Hub project says, while the highlights of today's G7 finance ministers meeting was their historic agreement on a global minimum corporate tax, they also pledged to work together on central bank digital currency. If I could just go into this for a second here. It's a very short read. Innovation in digital money and payments has the potential to bring significant benefits, but also raise public policy and regulatory issues. G7 banks. G7 banks have been exploring the opportunities and challenges, as well as the monetary and financial stability implications of central bank digital currencies known as CBDCs, and we commit to work together as finance ministries, central banks within our respective mandates on their wide public policy implications. We note that any CBDCs as a form of central bank money could act as both a liquid, safe settlement asset as an anchor for payment systems. Our objective is to ensure that CBDCs are grounded in longstanding public sector commitments to transparency, the rule of law, sound economic governance. CBDCs should be resilient and energy efficient, support innovation, competition, inclusion, and could enhance cross-border payments. They should operate within appropriate privacy frameworks and minimize spillover shocks, which we know they've talked about plenty. We will work towards common principles, publish conclusions later in the year. Now, let's just really quickly just see it's back down to 82. So we're at 82 cents and falling right now, but let's keep this moving. Stay with me here because that was his post on the G7. This is a diagram of just some of the operational architectures that could work for a CBDC system, and how to do the public and private sector interact with them, some possible designs and their merits. I'll just show you this very quickly here, and you can see some of the models. They have direct CBDC straight out, and then you have a hybrid with some entities in between, and then you have intermediated CBDC, intermediated onboard clients, KYC, and execute retail payments, right? CBDC is a claim on a central bank. Central bank processes wholesale payments. You can see the system up here, really referencing kind of one of the models and approaches. And then lastly here, indirect architecture, fully backed payments, accounts, or stable coins. And then it lays this model out as well. Let's keep moving here. We have this, which was put out along with that link, which you can see on my Twitter page. Follow us there, please, for that and all the things we're talking about. But I wanted to highlight out of this 20-page document just this particular portion. The whole document is a great read. And just like the diagram that I showed you, in this 20-page document, they entertain the notion of those different possible models, right? This particular model that they're speaking about here says, we note that some central banks may shy away from running a record of all retail data, for example, due to the issues with privacy and data security, see IEPAL 2019. It says such central banks might consider an intermediated CBDC architecture in which the central bank records wholesale balances only. An intermediated CBDC architecture. Well, just for those that want to know what intermediated means, just to clarify, coming between two things in time, place, order, character, etc. An intermediate stage of development, right? Coming between two things, and that's what this means here. Might consider a intermediated CBD structure where something comes between the two, is how I understand that, for the central banks and their records wholesale balances only, which really reminds me of the World Economic Forum and their little policymaker toolkit that they put out for all the different countries that attended the World Economic Forum of 2020. And they break down the wholesale, as I told you to remember, CBDC, back-end infrastructure, crypto assets designed for inter and intra-bank wholesale payments and settlements would be JPM coin and XRP. That is from this document, which you can Google, WEF CBDC Policymaker Toolkit PDF, and you'll get it all day long. And that wholesale back-end system that we're talking about here, right? A wholesale balances and central bank record. What are we really talking about? An intermediated structure is what we're talking about, right? So at the end of the day, let me just get that going for a second so it quits thundering while we're going on here. But what we're really talking about is a private ledger. A private wholesale ledger back end for central banks. Could it be the XRP ledger, or the private ledger that's been built on top of the XRP ledger, I should say? This is the BIS talking about one of the considered models here, right? So this gets very, very interesting to me as we move forward through this. And then I covered this just for a touch in the morning video, but I think it's pertinent we go at this again and with a little more information this time around. XRP supply shock could be coming if Ripple decides to settle the SEC lawsuit. And really, these are remarks from Jeremy Hogan that align with the narratives that we have been carrying on this channel since the day I started the channel. And it's the idea of a price adjustment or a price set or a price floor for XRP. What has always been the question of speculation is, how do we get there? Maybe, just maybe, the SEC lawsuit is how we get there. If you take, in fact, some of the considerations and possible settlement options that could take place, we could see things like what Jeremy Hogan has talked about here, where in this section, I want to go through it with you again. Again, if you saw the morning video, stay with me here. You know, I believe that a settle agreement would likely include Ripple paying a penalty, but a penalty specifically limited to dates pre-lawsuit. A settlement would likely not include disgorgement of profits to purchasers because of the impossibility to figure out how to disperse the funds. A settlement could also very well contain a term which includes limitations on the sales of XRP released from escrow. Now, remember, we are speculating about all these things. He is, I am, but I think we are in the right place, and we're talking about the right things. This would in effect limit or slow the flow of XRP, right? Because basically Hogan also posits that a settlement would likely include an agreement that would limit the sale of XRP to private sales for companies and clients, shrinking the supply of XRP on the market. This would, in effect, limit or slow the flow of XRP into the marketplace. Sales to Section D or corporate purchasers cannot then be put into a public exchange for 6 months, maybe, or up to a year. A settlement containing this term would essentially bottleneck the flow of XRP into the market for years to come. The attorney notes that should Ripple secure a settlement with the SEC, this would make them the first crypto firm to be fully approved by regulators. The settlement would put XRP in the clear as far as securities violation and such. Ripple would be the first crypto company to be 100% in the clear from XRP. If you're not, for some reason, following Jeremy Hogan in legal briefs, I highly suggest that you do. Shout out to you, Jeremy. You are amazing, my friend. This has been a conversation that we've talked about for a long time here. And I just want to say, to this point of speculating and possible outcomes, we don't know what they'll do, but I think it's right that we start to entertain the idea of some of this taking place. And I've been talking about it for a long time on this channel. And the idea is that if, in fact, they were to rule that they could really sell OTC to accredited investors, institutional level clients, and that there would be some kind of a restriction for selling, for those clients to sell to public exchanges for 6 months or up to a year, this would create a bottleneck, right? This would create a moment where the only XRP that is available is now whatever happens to be floating around on all of the exchanges, which are known as the secondary market. And if those institutional clients continue to keep buying OTC after the settlement over the counter back end in the wholesale market, right? But they can't sell the XRP to the exchanges for 6 months or a year potentially. If that happens, it doesn't say that the institutions couldn't go on the exchanges and buy the rest of it up. Think about what this could do to price. This could send the price absolutely parabolic, is what it could do. Because at the end of the day, if something like this is put into place, it will be the only crypto company, firm, and token that is really in complete compliance all the way around the board. And if that were to happen, it would make it the most safest, reliable asset in the entire space, the digital asset space. While at the same time, U.S. retail investors are already restricted from getting the asset greatly right now. So during a 6-month or a year blackout from the institutions and accredited investors being able to sell to the exchanges, the only thing left to do in a moment like that is for the institutions and accredited investors and whatever's left in retail that understands what's actually happening here to buy the remaining XRP that is floating on the exchanges themselves. And once that happens, you're going to have a reset moment, I believe, because you're going to see a buying out of the buy and sell walls on the exchanges. The order books will get bought out in that 6-month or year period if something like this takes place. And they will get bought up to the point that the price of XRP becomes very high. And if you understand that if that takes place, then you would need to understand this. No one will understand that moment better than an institution, because an institution will understand that you have 6 months to buy XRP and less, because every day that you buy it, it will continually become more expensive because you won't have downward pressure on the price the way you currently do. I want to go ahead and move to this right now. And I have to remind you, all of this is on the heels of June 11th through 13th. We see in just a few more days, the world leaders will come together for their portion of the 47th G7 summit. So listen to this. This is how long XRP bull run or price set. And this is one of my earliest videos that I ever put together on my channel when I started my channel. And I want you to listen to this little 1.5 minute clip here, and we'll get back to it. Here we go. Will XRP have a bull run after it gets the legislation, the regs, and a classification? Or will it get a price adjustment where they come in, perform a trading halt, and basically someone or someone's entities take over and control the coin for the level of global banks and financial providers that are using this all over the world to provide the stability within XRP's price? And when I go back to the point to say, where is this guy coming from? I go back to Miguel Viez's point in Ripple Drop 7, I believe, where he explained that the real liquidity won't come from the retail speculators, which is you and I. And it won't even come from the market participants. It will come from the real businesses using XRP. Now, that's my greatest support for saying, will we see a price set, a price adjustment, whether they come out and use the COMEX rule, which is a rule that's used for commodities, or will we come out and see them halt the market for a trading halt just so they can introduce the XRP futures into the United States, because we know that they're already in the rest of the world? And consequently, if they were to come in and do a trading halt and take the coin over, that would do away with the futures market. So that would mean if they were going to do away with the futures market, they only created it thus far to create some liquidity to get an ecosystem going for XRP in general. So we have to deal with these questions. What do you guys say to this stuff? I can't wait to see. And I tell you, I think it's funny that this many years later, a couple years later, and I've thought that since before I even started the channel, and you can hear me banging all around it a few years ago. The reality here is that, I brought up a couple things. The COMEX rule, which is used for the metals market to control hyperinflation or massive moves in the market and the futures on top of those underlying assets, and something like that certainly could be exercised. And then I also mentioned the futures market, for which we have not seen that market develop for XRP, although open-ended futures have been offered on XRP, but they're in perpetuity. They're perpetual, right? So they don't have any term on them. So they're not 1 day or 1 month or one financial quarter or what have you. They're just open-ended. So the interesting part here is that when I talk about a trading halt, then I'm still not sure how it would get done. But as we move through this lawsuit, I can see where, one, we've already been halted to a great degree, where they've slowed the retail investor buying to what, let's say, a trickle in the United States. Well, if we see a settlement proposed in some scenario thereof, like what Jeremy Hogan has talked about, then we could see another bottleneck and a halt for another 6 months, maybe even a year, because even though that the institutions and accredited investors and dealer brokers could be buying this asset over the counter, they can't sell it on the exchanges for a certain amount of time, which would allow those same buyers on the OTC market to turn around and purchase the asset off of the exchanges as well. That could take the order books to an extremely high price for XRP, and you have a combination of what is known as the Shane Ellis theory, and how you could see the price stair step very quickly in a process or a scenario like that. Again, G7 meeting coming up, the 47th G7 meeting, 11th through the 13th. We know antiquated market infrastructure and cyber attacks are a huge issue. We know digital currency and corporate tax and digital tax globally, internationally, is a huge issue. We know that Diem coin, possible global stable coins, and digital currencies are also a major talking point of this 47th G7 summit. And all of this is happening while we get closer and closer and closer to finding out exactly what's going to happen with the Ripple SEC case and the escrow. That's going to do it for me. Make sure you hit the like and subscribe, leave a comment below, and share with somebody you know. I want to let you know right now, if you need a product or service, make sure you please check the link in the description and comment boxes. I Trust Capital, the best gold, crypto, silver IRA, pure VPN, one of the many layers of protection that I use to help hide my anonymity online. Ledger Nanos, to be able to take my crypto and get it off the exchanges when I need to. I tell you, a lot of stuff is in there, things that I use each and every day, and you may need it too, and they are trusted, vetted links. I'll catch all of you on the next one.